What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 7th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are. Today, we've got a lot of different important things to discuss here on the Daily Update. As always, we'll be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got some headlines to discuss for crypto. There's been a recent comment by Patrick Bryan, the CEO of Overstock, one of the early companies to adopt cryptocurrencies as a form of payment, coming up with a really interesting comment that I really agree with and I wanted to share throughout the video. We'll also be talking about the general rise in cryptocurrencies, and again, what we talked about in our last video, and what I want to kind of add is some comments here, just in case to prepare if markets start to move higher. And along with that as well, I want to spend some time really to kind of summarize what happened over the midterms last night in the United States, and then also talk about something that has to do with financial markets, and hopefully summarize it into a decent little rant that might, hopefully please most of you. So anyways, let's go ahead, let's dive into the daily update and take a look across the board at cryptocurrency markets. So across the board here, crypto is doing a little bit better than it has over the past few weeks. Again, we've been continuing this multi-day uptick, and it started to spread outside of just simply Bitcoin and the ripples and the EOSs of the crypto space, and really has gotten across the board. You can even go to the next 100 and you can see a very similar trend across the board, most players in the green. However, no serious leap up in volume. Again, we've been holding this slight increase that we've seen over the past few days, around $2 to $3 billion out of the normal range. But nonetheless, it is something to definitely keep an eye on. It's gotten people more actively trading, people picking up a few altcoin positions as confidence has come back into Bitcoin. And as we realize this, we've not only seen an increase in market cap of around $17 billion over the past few days, but along with that as well, Bitcoin dominance coming back down to the levels we saw back in September. And as we know historically, it tends to be that when you get a double top in market dominance or lowering highs in market dominance for Bitcoin, it means that not only Bitcoin's moving higher, but altcoins are probably coming to follow. As we talked about, guys, if you get Bitcoin dominance below 50, that's going to be a really good telltale sign that markets are on a risk-on mentality, in my opinion. Again, it's no guarantee, but with some players like Ripple coming into play here, continuing to move higher. You have Ethereum, for example, on a multi-day uptrend, which is good to see for altcoins. When you have some of these leaders coming in, and also Bitcoin Cash with the upcoming fork, that's again I think spurred the fork craze that we had back in 2017, yet again in 2018. These are the kind of signs again across the board. It's kind of a macro picture of risk taking in the market. So people are getting a little bit more excited. People are taking more risk, and that's usually a sign that overall markets are going to be moving higher. How long is that going to be, and do we have enough substantial factors to make that happen? Only time will tell, but we'll go ahead and talk about some of those here in the video. So I want to go ahead here, get the chart. I know a lot of people love to look at Bitfinex, but I like to look at more fair exchanges here like Coinbase that have more of a steady steady rate with the US dollar across the board. Bitfinex is kind of in its own water, so I tend to use the majority of exchanges out there that a little bit more transparent in this case. So in the case of Bitcoin over the past few days, we can obviously see Bitcoin's moved up about $300 from the relative lows over the past a little bit over a week, and we are getting very, very close to testing some of the key indicators that we've been talking about. We want to see Bitcoin get above the 100-day. And I think once you get above there, you've got a clear rally or an attempt to reach up to the 200-day. However, that's really where I'm going to bring real confidence in regards to a potential altcoin rally going into the close of 2018 into the open of 2019. We need to get above the 200-day. We need to find support on the 200-day, really hold that support, and then we'll have an opportunity to really move higher over the next few months. But guys, I got to be fair again. As I mentioned earlier when we were talking about volume with this correlating price action, we are not seeing the correlating volume coming in just yet. All right. Really, right now, it's mostly still just people trading tether pairs or other pegged currency pairs, and a little bit of volume on the actual fiat currency on-ramps like Coinbase, trading with Bitcoin. We're just not seeing the volume yet. I'm not trying to be a negative Nancy. As always, just want to be realistic with you guys, but we need to see that volume before we can get any serious confidence. And it can't just be a few $1 billion a market maker volume. It really needs to be a catalyst that drives tens of billions of dollars in the next coming months into crypto for trading volume. We're just not seeing it yet. So again, keeping an eye on that. Nonetheless, all the signs are still going into play. We're not seeing newer lows. It's good to see the higher levels of price for Bitcoin. Want to see this continue, and as it increases, not only larger price moves, but larger rings of volume coming in with it as well. Going on though, as we talked about, Ethereum has been doing quite well, even comparative to Bitcoin. We're above the 50-day moving average, which just flattened. We're very close to the 100-day. Again, I'm very interested at the idea that if we get above the 100-day on some of these altcoins that have just been on an absolute decline, you could have a really interesting opportunity here to retrace back up to the 200-day. As we take a look back here, we obviously know when we retested these lows in the past, we got a pretty fast rally on Ethereum, testing back up to that 200-day. And again, I think we could possibly see something like that. It's not too crazy to think that Ethereum can make some moves comparative to Bitcoin, especially if Bitcoin starts to pick up towards 7,000. Again, if Bitcoin gains confidence, you're going to see it in the altcoins, guys. It's pretty tendent. The one thing I don't like here is really the lack of volume across the board. Now I'm looking at just Bitfinex. You have to look across the board on the exchanges, but there hasn't been a major spike in volume for Ethereum, at least across the board on the exchanges that I really trust. So it makes sense. There hasn't been a serious push for altcoins just yet, but if this keeps picking up and price action keeps moving, it'll draw people in. And along with that, if we get talk of Ethereum futures contracts, again, another big plus that could really carry Ethereum's price here. I wouldn't doubt it for a second. Going on here, let's take a look at Ripple. Ripple right now coming back up to test its relative highs here, around 90,000 Satoshis outside of some of the parabolic price action that Ripple can close up to. We'll go ahead and take a look here on Binance for some more accurate volume and price action. Again, I like the buildup in volume here. You're going to need that to continue today. Again, Ripple, when it starts moving, it doesn't stop. The more you have this stagnate and push sideways, whereas most things I would say, yeah, you need a slight correction. Ripple's not like that, or XRP isn't like that. It keeps moving, guys. So you really want to see this come up today and close above the previous resistance point here, and to make that support, if anything, if it's going to have a pullback. And if it can do that, Ripple could very well, or XRP could very well continue to rally if we get Bitcoin continuing to move. But I like to see the volume increase here. But again, really going to need some more substantial volume coming in. It's just not enough for me to get fully sold on it. But nonetheless, I'm pretty well exposed in altcoins at the moment, guys. I still believe that it's probably right now, I don't want to speak for anyone. I'm not giving you guys financial advice, but at least for me personally, I'm in a risk-on mentality in this market. I've been like that for the past few months, and I haven't been losing. In fact, it's just either been going sideways or been going up. So again, it's just a matter of things continuing to pick up momentum. But I don't want to get too overly confident. Let's go ahead and take a look at EOS. EOS has probably one of the nicest charts here for most altcoins, even though I'm not currently investing in any. It does look nice here. I do like the setup. The rising lows here, similar to what we've seen with Bitcoin. EOS is again one of the top 3 projects with new generated wallets, along with Stellar, and I think the other one was either Ripple or I'm trying to remember the other player. Oh, no, it was Dogecoin. Actually, was the third one. But in this case right here, we can see that EOS is building lower lows and is getting very close to squeezing possibly through this resistance point at around 90,000 Satoshis. I don't know why my thing was reading that, but yes, around 90,000 Satoshis. So I want to see this. If that's the case, you could very well get a rally up here probably to 120,000 Satoshis to test up to that 200-day moving average. Would be pretty likely if that would be the case. Going on, let's go ahead and take a look at the few more protocols. I know I've been kind of ditching on the altcoins, guys. There just hasn't been much going on, and I don't want to bore you guys if there's nothing going on at the moment. I like NEO and the fact that it's getting very close to these moving averages. Again, a lot of altcoins providing a huge amount of room. If they get above their 100 days and their 50 days, the 200-day is at a pretty far distance to where we could see a really big pop rally on a lot of these altcoins. That goes across the board. Take a look at ADA, same case. It's a matter of getting above that 100-day. Look at the gap you got to fill there between the moving averages. We can go across the board here, take a look at some of the currency plays. NANO, for example, one that I'm still keeping an eye on. I still think you could see the momentum shift on this. The big thing I actually want to see on NANO is for this to come up and actually get above the 200-day moving average and make it support, or maybe form a cup and handle. That would be really good for NANO to confirm that this has been the full bottom here and that we're not going for new lows, but it needs to hold on 2,800 Satoshis. If it breaks that, has a close below it, I'm going to lose a lot of confidence on NANO and wait till this actually comes down probably to double bottom. Going on here to XMR BTC, Monero has been doing quite nice over the past few days. Want to see it hold on the 50-day or at least the 100-day and continue to cup up, get above this 200-day and make that support, and then we could get a continued rally. And most altcoins are following relatively in sync, guys. That's why I'm not doing too much TA here. But above all, I think more than anything, so long as you can see a parabolic rise in volume on a weekly basis in Bitcoin, meaning that really over each week we're adding $3 billion, $5 billion, $10 billion in daily volume, I think that's really what's going to signal the risk on factor in crypto markets. Sorry, not specifically for Bitcoin, but for just generally for crypto markets. So that's what I'm going to be looking for. Volume's the key here, guys. Going on here to the headline, ending our TA section here. I want to spend some time to talk about Patrick Byrne's recent comment. He's the CEO of the well-known e-commerce company Overstock that was well known for accepting Bitcoin very early on. He's very libertarian-esque. He really believes in kind of the liberation of sound money from cryptocurrencies. Now, he recently did an interview with Naomi Brockwell, who, if you guys haven't checked her out, definitely should go check her out. She's very energetic, very well spoken on cryptocurrencies. But recently did an interview with Naomi, and basically throughout this interview, I really like the comment that Forbes picked out. Now, I want to be fair here, guys. Before we look at that quote, the headline, and this is very tendent with most major media corporations, they always pin price action to something. They want to correlate it with something. I don't think that Patrick's comments are really what caused the rally over the past few days, but his comments do boast quite well. And I think they play more actually with the fundamental value of cryptocurrencies. And again, the talk that, the point that I just keep going back to my talking point of how this isn't just some speculative digital asset class. It's going to be labeled as that as we go into having backed and having the ETF and Ethereum futures contracts. That's what the West is going to view it as. But what it really is what I think the eastern part of the world, or the emerging markets of the world, is really viewing it as. And this is Patrick's comment. People turn to it where they collapse, like Venezuela or Cyprus or Syria, something like that. Byrne told to Brockwell. When people start getting into it, it is where their own financial system collapse. Is when their own financial systems collapse. My bad. So yes, given that I think the entire modern financial system is a big Keynesian magic money Ponzi, money tree Ponzi scheme, I do expect that the day will come when people turn to crypto. Well, I apologize, I struggled to read that for some odd reason. I think it's because I've already rambled on for a good 10 to 15 minutes. But anyways, if you're still here, I'm doing something right. The fact of the matter is I think as much as this might sound a little bit excessive, I think Patrick really isn't wrong. I mean, if you guys have spent enough time watching the daily updates here, it doesn't really matter where you come from, and you'll hear me ramble on about it later on in this video. Just the absolute, Ponzi scheme that the financial system is in the United States and abroad has just absolutely blown away the minds of millions of people, and it's going to get to the point again where it can't sustain itself, right? Every Ponzi eventually collapses in some shape or fashion, and that really starts off with the currency, the fiat currencies of the world, the dollar, the euro. It starts and ends there. And when those currencies collapse, the massive store of value, which is our purchasing power as average everyday citizens who aren't in gold and silver, who aren't in cryptocurrencies, which I believe will eventually become a hedge against these traditional systems and actually be the replacement for traditional money, those people are going to lose their purchasing power. And if you think it's only going to happen in Venezuela or in Turkey, I would say think again, because there is no fiat currency historically. I just actually recently did a podcast recording with Mike Maloney. We'll have up in the next few days or weeks. But Mike was pointing out the fact, I was saying the vast majority of fiat currencies fail. And he said, actually, no, there's no fiat currency historically that's ceased to fail. And I just had misspoken, but there was a very good point that he clarified that, because again, these systems are the same exact systems. They don't change. There is no different mechanics between the dollar and the euro, right? So it's important to understand that, guys, and understand that I think above all, cryptocurrencies are really going to serve what they label themselves as. They're going to serve as a replacement for currencies. So really interesting stuff. I'm glad Patrick sees the value in that. Would love to meet him one day. Would love to have him on the podcast. He's a very fascinating guy. Was an early adopter of cryptocurrencies. And it's cool to see someone in the business world kind of get that. But I think it's understandable. He's very libertarian, very kind of out of the box, is an out of the box kind of guy. He's very clever and smart, and has an experience as well in finance and understanding financial markets. So I want to go on here, guys, to talk about traditional markets, equities predominantly. Now, as we can see, futures are trending up about 0.5%, almost close to 1% on the NASDAQ. And this has been, most people are correlating and tying this to the results of the midterm elections in the U.S. Now, I don't know if you guys got to go out and vote yesterday. I hope if you were, felt you were well informed, you guys got to go out and vote for the candidates that you liked. I want to spend some time to rant and rave a little bit here. And, kind of reach out to you guys personally in my audience, because I know this election season, and generally I think politics as a whole and just the political climate in both the United States and across the world, this isn't just a U.S. phenomena, has been quite divided. And I gotta really say, I focused in on this headline this morning, and I gotta say, I'm not a big fan of CNN. I'm not a big fan of mainstream media in general. This has just been me for the past few years. But I gotta say, I loved this headline I woke up to, where it said stocks jump because investors like divided government. And that really grinded my gears, because I think a lot of people, went out and voted the other night, and voted for their set of candidates on whatever political party you represent yourself with. And this is something that I really, really want to drill to people, and that is that we've got to stop the bickering, dividing the United States, because basically the establishment got exactly what it wanted. We've been talking about this overinflated equity market of ridiculous rallying, of stock buybacks, of manipulation. JP Morgan, I actually forgot to pull up the tweet here. JP Morgan just got caught last night. One of the ex-traders just came out and confessed for about 7 years that JP Morgan's commodities division had been illegally manipulating the price of commodities. And this kind of stuff has been going on. This kind of establishment monopoly over finance has been going on for years. And this is kind of the point I want to drill in. I'm going to try to kind of keep on point, guys. You guys know I end up rambling. And this is a very, I think, controversial topic. But I want to spend some time to jump in here and talk about what I think is really causing the divide in the U.S. It doesn't really have to do with, I think the face that people put to. A lot of people don't like, for example, Trump in the United States, and a lot of people don't like the other political party, and people are bickering back and forth. And, you guys always come to my channel for the most honest content, and I don't really want to talk too much about politics, because one, it's quite irrelevant, and second off, I don't want you guys to hate me for my views on things. What I do want to share is something that I think will reach across the board to all of you, and it's, I think, probably much more value than talking about specifically politics, and that is what you're being distracted from. The United States just went out and had one of the most hostile midterms that I've seen in history. It had one of the craziest outcomes of people coming to vote in the midterms. I haven't seen that many people at the polling stations nearby where I live. And I think that people were completely sidetracked, and they still are. They've been sidetracked for the past few years, and they still are, from what's really causing such a pinnacle of anger in the U.S. and across the world. And that is not one political party not doing what they're supposed to do, but the gridlock, the establishment narrative that has continued for years, and the inevitable wealth divide that we've seen in the U.S. and abroad. And again, I'm not here to so much to debate wealth and stuff. I'm more focusing on the fact that there's been a system going on for years that has not worked for the average person, and we don't know how to pin it. We don't know how to find out exactly what it is. And it has to do with what we've been talking about, guys. I mean, look at this. We just reached a history record of stock buybacks and dividends in the stock market, higher than levels back in 2007 and 2008. I mean, that is seriously substantial. This is just, for example, buybacks. We've almost reached, and we're well on pace to reach by the end of the year in 2018, a record $1 trillion in stock buybacks on an annual basis. $1 trillion going into simply propping up equities. You want to know who's holding those equities? Well, I can give you a good picture. The bottom 50% of Americans by income own 0.5% of all assets. 0.5%. Put that in perspective. You want to know why the poor and the middle class aren't doing well in the United States? It's because of that. And you take a look here at the dividends here. Almost $500 billion on an annual basis going into dividends, people who own shares. Where do you think that money's going? It's not going into the hands of average everyday Americans because they're not invested in the stock market. We have very improper education in the United States about investing. I tried to teach my friends about it when I was younger, but we have this very, very big bubble going on right now. And it's what's caused a lot of the wealth divide in this country. It's caused a lot of the anger in this country. And it's because we've had an establishment that is tailored, whether it be central banking, whether it be our government, has continued to tailor towards equity markets and not Main Street. They've focused on Wall Street, not Main Street. They haven't focused on the actual economy and getting real money invested in that economy. And that isn't at the fault of someone. Again, I don't mean to be too opinionated here. It's not at the fault of someone like Trump, and it's not at the fault of someone even like Obama, the previous president. It is the establishment. It is the bureaucracy. It's why the markets, I know the headline changed on CNN, but it's the reason why historically stocks do well on gridlock when there is, for example, what happened last night, a Democratic House and a Republican Senate. Nothing's going to get done. They get to keep playing the same game they've always done. And if there's a policy they need to get through, you can bet that they have enough politicians on both sides in their pockets to make sure it gets passed through. It's a system where basically they're the winners 24/7, and you're not invited to the party unless you're invested in the equity markets, which most people aren't. And the thing that I want to point out here, I really like this tweet here with the kind of hate and the vitriol that's going on in the political climate. We're at a point right now where, even though I think the numbers are quite skewed, as they always have been, unemployment is at record lows for a very long period of time. It has been this low since the 70s, according to the numbers. We'll see if that's the case. Either way, what happens when unemployment goes to 6 or 8%? What happens when the stock buybacks can't keep propping up equities and the bonuses stop flowing and wages start to go down and unemployment spikes up and people start getting laid off? And when benefits start getting cut, what happens then? What happens? Does the vitriol and the hate grow even more in the United States and across the world? That's a very, very big worry of mine. But again, another chart right here that I think explains it quite well. There's a massive, massive issue here. It has propped up equity markets, and it has gone about actually dismantling both the United States and a variety of countries across the world. And it is the absolute bubble in equities, in the housing market, across the board in assets. That's really what it is. We've never seen anything like this before. So, anyways, guys, that's my little rant and rave. Again, I can't explain the importance enough of stock buybacks on the market. You could literally take this chart that we've been looking at for months on the pattern of companies in the S&P 500 who were in the blackout period, now exiting the blackout period, and you can just see how equities have started to rebound. It doesn't make much sense, but at the same time, it's so simple that it kind of does, So long as companies can keep propping up their own stock, it's going to keep going. So, sorry for being a little bit opinionated. Sorry for ranting and raving. I hope you guys found some value in it, and I hope you see that I'm more than anything trying to bring people together and realize that we're not so different. And what really I think is holding back everyday people in the U.S. across the board and even on the global stage is really stuff like this. It's stuff that you don't see in the headlines. You'll never see a media company cover because they're not able to divide us through use of it. It's something that we can all realize is screwing us all over, unless we're a part of the party. And it's most likely that you're not a part of it. Anyways, that's it for the video, everyone. Thank you all so much for watching. If you guys have anything you want to say on this, as always, whether you agree with me or not, I'd love to hear it down in the comments down below. Always love getting your opinions, as always. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.